Hi guys, welcome back to today's Stock Deep Dive, and today we are going to talk about Molina Healthcare, stock symbol MOH, right? Okay, so without further ado, let's jump right in. But before that, important information and disclosure. Educational purposes only. This content is created for informational and educational purposes only. It does not constitute financial, investment, legal, or tax advice, not a recommendation. Any analysis, charts, or company mentions are for learning and discussion purposes and do not represent a buy, sell, or hold recommendation or any specific trading or investing instructions. No license. I am not a MAS licensed financial advisor. You should conduct your own research and consult a licensed professional before making any investment or trading decisions. Market risk. Investing and trading involve risks. Markets can be volatile, especially in sectors affected by news, earnings, regulations, or clinical developments. Losses can occur. No guarantee. Past performance, historical data, technical patterns, or dividend history do not guarantee future results. Data accuracy. Information is based on publicly available sources as of 1st of April 2026. Accuracy and completeness cannot be guaranteed. Without further ado, let's jump right into Molina Healthcare, a leader in government-sponsored care, right? Okay. The key business that it goes into is Medicaid, right? Providing health insurance for low-income individuals and families, right? This is the biggest part of their business segment, right? Okay. Then they also go into Medicare, right? Serving seniors and people with disabilities, right? Okay. Also focusing on dual eligibles, right? People who are qualified for Medicare and Medicaid as well. And also offering health plans through the state insurance exchanges, right? They are a Fortune 500 company managing healthcare for millions of people across the US, right? Okay, across numerous US states. Here are some of the numbers. 2025 revenue, approximately $45.4 billion, right? 2026 guidance, right, is expected to be around $42 billion, right? Okay. It has a strong revenue growth in 2025, in fact, up more than 10%, 11%, right? Driven by acquisition and new state contracts, right, which is a good thing. But here are some of the risks, right? Management significantly lowered 2026 profit expectations in February, just recently, due to higher medical costs and the cost of starting a major new contract in Florida, right? Okay, so these are some of the risks that is involved. But going forward, they focus on cost strength, shifting away from general Medicare plans to focus exclusively on the $5 billion dual eligible, right? By 2027, right? Okay, so the key growth areas is scaling up the new Florida Medicaid contract and using their strong cash position to buy smaller health plans. And in terms of efficiency, also investing in AI to reduce administrative costs and improve how they estimate medical expenses. There are key risks involved as well, right? Medical cost pressure. If patients use more Medicare services than expected, Molina profit margins shrink, right? They are being reduced. And also government rates, right? Changes in how the government pays health insurers like them, right, can significantly impact their income also. And also guidance volatility. The recent revision in the 2026 profit forecast has made investors cautious about the management future estimates, right? Because it's a big revision, right? Final thoughts is Molina is a specialist in government programs, navigating a difficult transition year. Investors should weigh its long-term growth from new contracts against short-term pressures of rising medical costs, right? Okay. And here are some more numbers on their earnings as well, right? Adjusted earnings per share for 2026 is at least $5, right? But this is a big drop, right? Easily more than half kind of numbers, right? Okay, it's a big drop from its 2025 earnings per share of $11 and 2024 of $20, right? Okay, so it has been going down year after year since 2024, right? Okay, and this is due to one-time costs and medical trends, right? Upcoming events, right? First quarter of 2026 earnings, right, scheduled on the 22nd of April 2026, right? Okay, and also they have an investor day where management will explain their long-term plan as well, right? Okay, this is 8th of May 2026 projected, right? Okay, and valuation wise, the stock has seen a massive price correction, right? Now trading at a forward PE price to earnings of approximately 11.8 times, right? Okay, so let's get into the charts, right? Okay, and let me show you what I think technically in my move, right? Okay, so basically we can see from the daily time frame over here for Molina, it has been on a long-term downtrend, right? Okay, in fact, as of February, after it announced its earnings, right, it gapped down, right? It gapped down, and it gapped down quite a lot, roughly 25%, as we can see here, right? The previous earnings was not good also, right? It also went down around 17%, right? Okay, so typically it has been on a downtrend, right? Okay, and why am I covering this lot? Because during the June 2025, right, June to July period, right? Okay, it actually went down very sharply, right? Okay, from a price of 300 within about a month, it dropped about 40 to almost 50%, right? Okay, and this create a technically it create a oversold scenario, right? Okay, and the thing here is that since October earnings and also February earnings, right, it also went down very sharply as well, right? Okay, so all these technically is creating a very oversold kind of scenario where a possible rebound is possible, right? Okay, why I say this is because over here we can see very clearly after a sharp sell-off, there's a rebound, right? And the rebound is quite strong also. It's just that it's not as strong as the selling, right? Okay, but the rebound is easily, right? I would say 20-30% rebound, right? A very good profit-making opportunity over here as well, right? Okay, and but the thing here is after another strong sell-off, there is another very strong rebound as well, right? Okay, so the sell-off recently over here in February haven't started rebounding yet, right? Haven't started rebounding yet. So and this is the reason why I say that maybe it is time for the oversold rebound to start soon, right? Okay, maybe only, right? Okay, so technically, right, this is a support level, right? Okay, and maybe it will break, maybe it won't break, but even if it breaks, the next support level is over here, right? Okay, over here, a long-term support established since 2020, right? Okay, and I would say either one will hold, right? Okay, or at least being tested and start to have a so-called oversold rebound, right? Oversold rebound similar to this, right? Because this type of rebound, if you look at it at 140, it jumped all the way to 200, right? Okay, a $60 jump on a $140 stock. This is also roughly about 30 to 40%, right? Okay, and I'm just estimating, all right? I'm just estimating. You go and do the actual calculation. But a $60 jump on a $140 stock is pretty good investing or trading opportunity, right? More of a short-term trading opportunity. So over here, and that's why long-term wise, I think it is a little bit oversold. Short-term wise is also a bit oversold. So I'm banging on the fact that previously when it was oversold, there is a short-term strong rebound, right? What I term it as a oversold rebound, right? And it's near, right? Okay, it's near because it haven't started yet, right? Okay, so yeah, based on that, I do see that the possible levels of resistance that it might go in the first place is over here and over here as well, right? Okay, and maybe even here, right? Okay, these levels, I think this is 203, right? Okay, 203 is a very good level to aim at if it does breaks, but of course in the first place you have to break around 158, 160, right? Okay, anyway, even a very short-term low target of 158, 160 kind of pricing, right? Considering the price right here, it is also a 20 over dollars jump, easily 10 or close to 15% kind of jump towards this, right? Okay, but of course, once this one is broken, I think it might move all the way to the next resistance level at 203 over here, right? Okay, so yeah, that's my take on the overall technicals, right? Thinking that it might be oversold, right? And oversold rebound is highly possible, right? Okay, it might or might not happen, but I think it's highly probable, right? Okay, and because of that, right, current situation suffer a major gap down, right? A sharp drop, right, in early Feb, right? Okay, so creating an oversold scenario, right, which it haven't rebound yet, right? Okay, so and previous scenario where it was oversold, it rebounded, right? Okay, so support levels, major support like what I mentioned just now, established in February, which I highlighted just now, right? It was one, this might be tested, right? Okay, and maybe after it's tested, then it start to rebound, maybe only, right? Okay, and or if it might be broken and test the next level before it start its rebound, it is also possible, right? Okay, now a resistance level, the first level it should break is 158, right? Okay, and if it break 158, it should go towards 203, right? Okay, yeah, I put it to words, right? Bull case is that it break above the recent resistance level, right? Signaling starting, it may start a long-term uptrend as well, right? Okay, short-term or long-term uptrend, and bad case will be for it to break 121.06 and stay below, right? Okay. If it breaks and start to rebound, then buying interest come in, then it's another story, right? Okay. Risk management, use a fixed risk percentage, example like 1% of your total capital in each trade, right? We never put all our eggs in one basket, right? Okay, it's very dangerous to do that, right? Okay, very risky to do that. So we make sure like we are safe, right? When we invest or even when we trade, right? Okay, so 1% of our total capital will be used for each trade, right? Okay, correlation, right? Healthcare ETF is the stock symbol or ticker symbol is XLV, right? XLV. So normally when XLV will move, right, MOH will move accordingly as well, right? Okay, so yeah, some pre-trade considerations as well, right? Check the government policy, right? Watch out for any updates on CMS, Centers for Medicare and Medicaid Services, right? Okay, so regarding their 2027 reimbursement rates or even adjustment in their 2026 ones, right? This may affect their the company's profits, right? Okay, and position sizing, right? Due to higher volatility following the February guidance cut, right? Okay, consider smaller positions, right? Okay, like I say again, manage your risk, right? Do not overexpose yourself, right? Okay, and also cash flow, review the company's operating cash flow, right? In this upcoming Q1 report in April. Strong cash flow is essential for Molina to continue its strategy of buying smaller companies, right? Okay, smaller competitors, right? Okay, so that's all from me. Hopefully you have my take, right? I'm looking forward to this short-term oversold rebound happening soon, right? Okay, and I hope that you also put this in your watch list to monitor the stock, right? Okay, and hopefully by sharing this with you, you have a better idea whether you should put your money or not into this stock, right? Okay, of course, do your due diligence. Never listen to anything like I say, right? You need to make your own due diligence and research and decide for yourself, right? Okay, it may even go lower, right? Okay, so that's all from me, and thank you so much for watching. May the profits be with you, and I'll see you real soon in my next update. See you soon.
I hope you loved the video and learned something new from it. If you want to receive more videos like this, hit that subscribe button and ring that bell for notification. And if you want to learn more about the trade to win formula that I use in my trades, click on the link or button around this video to join my next free online workshop. In the workshop, you'll learn everything from finding the best opportunities to making consistent winning trades in the markets. I'll see you on the inside.